Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is Monday Mortgage Minute. Welcome back to a new week. Thank you so much for joining us again. This week, all eyes are on the Fed. You've been hearing me talk about this for a couple of weeks now coming into today. And Wednesday, May 4th, we're going to hear from the Fed on their decision on how much they're going to increase their short-term Fed funds rate. Now, we've been talking about this for weeks. It might be 0.25%. It could be as much as 0.5%. There are some analysts saying that they should do as much as 0.75%, but that might cause too much of a shock to the overall marketplace, although it is being argued that it is necessary. It's probably the least likely of the options, so we're looking at least 0.25% Fed funds rate increase on Wednesday, maybe even 0.5%. Now, here's what that's doing for mortgage rates already coming into a new week. We already saw bonds reacting to the upcoming announcement on Wednesday, trading higher for the day, which means that mortgage rates are already starting off the new week going up from where they ended last week, and we think that that's already just pricing in what is expected to be announced on Wednesday. Now, once Wednesday comes and goes, we'll find out exactly how the market's going to react to that, whether it will have already priced it in and they've just landed at the same spot that they were expecting the Fed to announce their change, or if there have to be market adjustments downward or upwards based on what that announcement is. So over the next couple of, days, we're really going to be honing in on what the market's reaction to the Fed's upcoming decision is, but also when they make their press release, we're going to be listening for key terms and key things that they're talking about with regards to inflation, with regards to monetary policy, with regards to supply chain, and with regards to what we're seeing impact people on the personal level when it comes to affordability across the board. All to say that the Wednesday, May 4th press conference being done by the Fed is really important. We're going to be really leaning into hearing specifically what it is they're trying to fight, what they're doing in order to fight that, and what that might mean moving forward. We're at a point in the economic factor where things are going to have to make some sort of change quickly in order to tamp down inflation, in order to corral interest rates into a manageable space. And of course, mixed in with all that is you have home equities still really high and home values pretty high. So at some point, something has to give, and all these factors and variables that mix into the formula end up putting pressure on one another. And we're starting to see that what the Fed's decision was years ago is now making an impact now and brought us here. And the real question is, are they making adjustments too little and too late, or if they're making them on time, and this is just what the new normal is going to look like moving forward? Be on the lookout for social media this week on Facebook and on Instagram. We're going to be writing this week's article specifically about the Fed's decision and what that means for mortgage rates moving forward over the next 30, 60, 90 days. And honestly, some of what they decide this week may chart the course for the rest of 2022. As always, thank you so much for tuning in. Please share this video with people you know and love who you want to help them win in mortgage and real estate in 2022. As always, be in direct contact with your loan officer. Make sure you send them a DM. You can write a comment here on the video, or you can also call or email the office to make sure that you're making all the best adjustments you can based on what we know now and what we think is happening up ahead. Thank you so much for watching. We'll see you again next week.